What's up, y'all? Morgan, the CEO here. So, I've been having people asking me the basics of Forex. You all are interested in learning more about it and possibly getting in and starting to trade and making money and all that other stuff, right? So, what I wanted to use my platform for is because, first off, I want to say by no means am I a financial advisor, and by no means am I an expert in these things. But I do have years of experience and I do have some knowledge on how to trade, and I have been profitable and things like that. So what I wanted to do, my intentions is to teach people who are interested in just starting out in Forex or just trading period, because what you'll realize is a lot of the technical things can be used amongst all markets, so stocks, indices, commodities, and currencies. So anyways, I put together a few slides so that I can teach y'all just the basics. So this is like the first level, or not first level, but the first lesson of a series that I'm going to provide for you all, just to kind of give you the basics of trading, foreign exchange, and whatever. But anyways, let's get going. I got it up here on the screen. It doesn't look the prettiest, but it has all the information that's needed. So we're going to go from there. Anyways, so first we want to start with what is foreign exchange. So also, if y'all see me looking up this way, it's because I'm looking at the actual presentation that you all see on the screen. So I haven't had my setup right to where all the professional YouTubers got it, to where it's like they're looking at this y'all and everything, whatever. I got my phone right here and I got my computer right here. So this is how we're going to do this. Anyways, so what is foreign exchange? Okay, foreign exchange, well, Forex, that's the first thing. Forex, you hear people saying Forex, but Forex actually is short for foreign exchange. So you know how when you go to the airport, if you're somebody that travels, you're traveling internationally, you say you're coming from the US and you're going to somewhere, Australia, right? You're going to have to, you can't just go over there and just start paying them with your US dollar. You're going to have to exchange the money. And Australia actually is called a dollar as well. But say you go to Japan, you're going to have to exchange for a yen, a Japanese yen. So anyways, that's what that is, foreign exchange. You're basically exchanging one currency to the other. Cool. So foreign exchange trading is the act of buying and selling currencies with the goal of making profit. So when y'all see me posting stuff and I'm like, I'm in profit or take profit or blah, 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 it's because I am purchasing. I guess you wouldn't want to say purchasing, but for the most part, say you're opening up a trade. Opening a trade is kind of like purchasing, right? So you're opening a trade and you expect to make profit from it. It's actually a little different because it makes more sense if I were talking about stock. Because with stocks, you might buy a stock. One stock might cost $1, right? You buy it at $1. 3 months down the line, it's worth $5. You done profited $4. So it makes sense if I explain it like that. With currencies is a little different because you're trading pairs, but I'll get into that a little later. But basically, it's the act of buying and selling currencies with the goal of making profit. That's your goal. Because what else would you be doing it for, right? But to make profit. Anyways, so traders in the market from anywhere in the world. Traders trade in the market from anywhere in the world through software and phone applications. Now, this is for retail traders, which will be you and I. You see people always doing the screenshots of like MetaTrader or like Forex.com or TradingView. You all are beginners, so you probably have no idea what I'm talking about with even saying that. But anyways, it's phone applications, phone apps on your phone. That's what we trade through. Bigger institutions, most likely they're doing softwares or like algorithms, stuff like that. But I don't trade with them, so I don't know what they use, but I'm pretty sure it's software. Anyways, trading offers the potential for high returns and is accessible to traders of all levels and budgets. So, me and you, we can open up an account, put $100 in there, trade in the same market as banks who's trading millions of dollars. So, that's pretty cool, right? But obviously there's different levels to that. If you just got $100, you gonna have to really know what you're doing if you're trying to build that account, because it's $100 isn't a lot to work with, but you can do it. You can do it with $50, stuff like that. So that's the cool thing about the markets, is that it's open for people with different budgets. It doesn't discriminate. Okay, so providing investors and traders the opportunity to profit from current fluctuations and to diversify their investment portfolios. So when it comes to building your investment portfolio, so you can be someone who holds stocks, and you don't want to just only have stocks to your portfolio. That's what it means by diversifying. Like, you can be someone who has money in gold. You can be someone who has money in the US dollar or the Aussie dollar, or, well, technically with trading, you're not necessarily holding it. See, with stocks, you're purchasing somewhat ownership of that company. But with the currencies, you're not technically having tangible currencies. So it's actually a little different, but it is a way to diversify your portfolio when it comes to, okay, I got my money in gold right now. And I got my money in stocks. I got my money in, I can't think of any of those other things, bonds, stuff like that. Anyways, so yes, people use it to diversify their investment portfolios. Okay. Foreign exchange market is the largest financial market in the world. They trade, it's like trillions of dollars in and out every single day. So that's cool. I'm pretty sure it's just based off the fact that every country has a currency and money is just moving daily. So Forex trading plays a vital role in international trade and investment, as businesses and governments need to exchange currencies to conduct transactions across the borders. So, for an example, like a lot of businesses, they may get their products and stuff from, say, China, and there's an exchange rate. So, when you purchase something, say, just because you're in the United States doesn't mean you're paying United States rates. If you're purchasing it from China, you are paying China or their rates. I was about to say China's rates, but I mean, it's the same thing anyways. But like I said, like Japanese in the yen or the Australian dollar or the euro, whatever. So you'll realize a lot of countries do business with each other, but there's always an exchange rate. So that's what foreign exchange is. Boom, just straightforward like that. Foreign exchange, you're exchanging the currencies, and not everybody's currency is the same. It's not equal. So, all right, what is a currency pair? So when you're trading currencies against each other. So again, we're going to use the stock market again. So with the stock market, it's fairly simple. It's one business, right? So say you got Meta, that's the company, and they have a stock. You can have one share of a stock, and say the share costs $100. For $100, you purchase one share of Meta's stock, right? But with foreign exchange, you're basically, like I said, you're exchanging. So you're doing two pairs, or in this case, two currencies against each other. So you got the US dollar versus the euro, or you got the euro versus the Great Britain pound. Yes, pound. Or the pound versus the yen. So you're exchanging it in pairs. So when you're trading you're trading pairs. So a currency pair is a quotation of two different currencies where the value of one currency is quoted against the other. Simple. I should show y'all a chart. I actually didn't put a chart in here, but I guess I'll do a chart after this so that y'all can actually have an understanding of what that looks like. Okay, so currency pairs can be traded in the foreign currency pairs that can be traded in the foreign exchange market. Here are a few. So you got major pairs, minor pairs, exotic pairs. Major pairs for the most part is anything that's trading against the US dollar. So you got the euro versus the USD, you got the USD versus the JPY, which is the Japanese yen. You got the GBP, that's the pound versus the US dollar versus the Swiss franc, Aussie dollar versus the US dollar, USD versus the Canadian dollar. Those are major pairs. Then you have minor pairs. Minor pairs would be the euro versus the pound, or the euro versus the yen, or the pound versus the yen. Exotic pairs would be other countries that's more developing. So, say the Mexican peso, South African rand, Turkish lira. Probably saying that wrong. Lira. I've never traded this. I have no idea, but correct me if I'm wrong. Those are the less common currencies, and they're called exotic pairs. Cool. So the advantages and disadvantages of trading Forex. And this is me comparing it to other markets like stocks, commodities, futures. You probably don't know what commodities and futures are if you're a beginner, but I'm pretty sure you probably understand stocks. But you can also, in the market, you can trade gold, silver, you can trade rice, you can trade indices, which is like a pool of stocks. So like you have the NASDAQ. NASDAQ would be NAS 100, US 30. So like the top 100 companies, stuff like that. That has nothing to do with this, but I just wanted to explain it real quick. But when I'm saying advantages and disadvantages, I'm saying in comparison to other markets. So some advantages of the Forex exchange market would be the market is open 24 hours a day for 5 days a week. With the stock market, it's open from 9:30 to 4, I believe. 9:30 to 4 Eastern Standard Time. That's New York. If you're in the United States trading. And it's only Monday through Friday. So that's for stocks. But with foreign exchange, they have different sessions. You got the New York session, then it rolls over into the Asian session, then it rolls over into the London session, and it just goes and goes and goes. So because of that, the market is always open. So that's pretty cool. And then they open up on Sundays. So Sunday through Friday. Stock market is Monday through Friday. The only reason is like Sundays, honestly, is if you're in the United States, it opens up to us it's Sunday, but somewhere else in the world it's Monday already. So it feels like 24 hours a day, 5 days a week. I mean, not 5 days a week, but 6 days. But the market closes on Friday. So again, assuming you're in the United States, it closes Friday into business day, and then Saturdays is completely done. Okay. So because it's open so often, it allows you to trade more often. So that's more opportunity to make money. Also, the market is highly liquid. So that means that traders can easily buy and sell currencies and enter and exit positions quickly. Because technically when you're trading, and this is the same with like stocks too. So if I'm buying, someone else has to be selling. Someone has to be on the opposite end of what I'm doing. If I'm selling, someone's buying it from me. So if I'm selling a stock for $1, somebody's buying it from me for $1. So the same with currencies. If I'm selling, someone's buying. So because it's so liquid, means there's so many people in there just like placing trades, and it's a lot of money in that pool. Somebody's there to buy from your sale, and then also the money is there. So when you see you up in profit of $200, $300, $5,000, you hit close a position, boom, give me my money. So those are the advantages. A disadvantage, which this is with every market, honestly, is that there's a lot of risk involved. So you don't want to be in the market trading money that you're afraid to lose, technically. So I wouldn't say like put your whole savings in it and expect to like make profits on it, because with trading you kind of got to know what you're doing, because the just as well as you can make money, you can also lose it too. So like I had a trade today where I got into a trade, automatically was in a negative. I was down like $100. If I closed that position, I would have lost $100. But I just through my marking up of my charts and stuff, I felt like the trade was gonna eventually kind of turn back around. So I wouldn't be in the negative of $100 if I stayed in the trade. Eventually, maybe give it a couple hours, it will go into profit as opposed to being in the negative. But you got to be okay with sometimes your trade won't go the way that you want it to, and you may have to close out your position in the negative, which is a loss, not a profit. It's not always profits. So it's highly speculative, and that means that there's a high level of risk involved, and you have to know that when going into it, because it can mess your mental up when you see, oh my gosh, I just lost money. Another disadvantage is that currency prices can be affected by a variety of economic factors. So with stock market, if you're trading Google or Alphabet, if you're trading just their chart, right, you're only going off of news from that company. But with currencies, you're looking at data from their economy. So you're looking at consumer, like okay, like with the United States, right? They'll put out data that has to do with unemployment, interest rates, all kinds of stuff, right? Inflation, and all of that stuff not markets, all of that affects the market when it comes to the US dollar. So it's a whole bunch of news that can affect whether or not the US dollar is worth more over the pound or not, right? So it's a lot of economic factors that goes into it. So you need to pay attention. It's not just only looking at a chart and marking it up saying it's going to go down, it's going to go up, because you can mark up a chart just off of technical things and kind of like strategic movements that's happened throughout the years, and you can say, oh, this is probably going to happen, this is the probability. But at the end of the day, if whatever currency you're trading, if that country just in 5 minutes says, you know what, we're shutting down, then their investments and stuff, people are going to take their investments out, and boom, next thing you know, their currency is just right. It has nothing to do with the technical analysis. Whatever news they put out is what they put out. So you're taking that risk, because you can be in a trade saying the United States dollar is strong, and then 2 minutes from now, Biden says something like, we're shutting down again, and whatever. And then boom, next thing you know, the dollar is going down. And you have to, that's why you have risk management, because you have to be prepared for something like that, because you don't know what's about to happen in the economy. So you have to be prepared for stuff like that. And then compared to other markets, Forex trading also has a lower level of regulation, which can increase the risk for traders. Here's the thing. With the stock market, you can get yourself like, I can't remember what they're called. I can't think right now. But you can actually get you a person that's going to do your trading for you, as opposed to you doing it on your own, like app or broker. But for the most part, it's regulated, right? You can use apps like Webull, Robinhood, but you can also use, dang, I can't think of any of those, Schwab, or you can use your banks, you can trade through your banks and stuff like that, and it's regulated. It's protected. Forex, you have brokers who are regulated and brokers who are not regulated. And that means, like me, tomorrow I can start a broker and I can say, hey, come trade with me. I could place those trades, download my app, I can be your broker. And then 5 days from now, after you put all your money in there, I can run off with your money. People do stuff like that. Non-regulated brokers do stuff like that. So you have to do your research of who you're going to trade your money through. I would suggest just doing regulated brokers. So, like with crypto, you have so many different unregulated brokers that trade crypto. Actually, crypto is still, for the most part, unregulated, but you can trust that crypto.com isn't going to run off with your money. So, the same with Forex. Forex.com is a regulated broker. Most likely, they're not going to run off with your money. But if you Google brokers for Forex and something shows up saying, I trade your Forex.com, and you click on it, and it's a website that's not even like a protected website, and they're like, put your money in here starting with $1,000. If you don't know nothing about them, they're probably unregulated, and they could, not saying that they will, but they could never pay you out when you have profits, or they could run off with your money. So you want to do your research. So that's the only disadvantage, is that not every broker is created equally. So, you kind of want to be a little mindful of that. All right, the Forex market is made up of various participants that's all trading against and with each other. So like I was saying, for if I'm selling something, somebody's buying it, vice versa. So the people who's in the market, it's banks trading, it's corporations, it's governments, and then you got retail traders, institutional traders. Retail traders would be me and you. That's what I am. I'm somebody who's an individual who's trading. I'm not trading for a bank. I'm not trading for the government. I'm not trading for any of that. All right. So we're all in the same markets, putting our money in and trading and trying to gain profits, and everybody has the same goal. Just banks and institutions and stuff like that, they got more money. They're trading millions of dollars. Now, if you got millions of dollars, that's you too. But if you're somebody that's trading $500, then you're not a bank or a corporation. So that's that. So banks are one of the largest participants in the Forex market. They provide liquidity to the market by buying and selling currencies on behalf of their clients, which include other banks, corporations, and governments. But banks also use their own funds to trade currencies and make profits. So, you know how people say you put your money in your bank account? Most likely they're trading your money. So that's how they usually pay interest in your accounts when you got savings and stuff. Trust and believe, you put $500 into your savings and they saying that they paying interest each month. They pay interest because they want you to keep that money in there, because technically they took that money out and they're trading it so that they can make profits, so that they can pay you interest, or so that they can give out loans or whatever it is that banks do. All right, so corporations, they use the market to exchange currencies from international trade and investment purposes. So like I was saying, corporation, okay, so for an example, says a company may need to exchange a US dollar for a euro to purchase goods from a European supplier. So I could be a company in the United States, but my supplier is in Europe. So I need to exchange the US dollar to a euro so that I can purchase from my supplier. Boom. So corporations also use the Forex market to hedge against currency risk, which involves taking positions in the market to offset potential losses from currency fluctuations. Okay. Governments. Governments use the markets to manage their foreign currency reserves, which are used to support national currencies and finance international trade. Governments also use Forex market to intervene in their domestic currency, which involves buying or selling their own currency to influence its value relative to other currencies. That's how the governments work when it has to do with money. Y'all might know more about that stuff than I do, if you're somebody that pays attention to like what the government does or even what corporations do. I don't. I get this stuff, but I'm not doing this on the daily. Like I said, I'm a retail trader, so that's what I do. I trade so I can build my wealth. Governments and corporations trade basically so they can build their own wealth. They got their money going in and out for different reasons. I don't have nothing to do with that. But I do know that as a retail trader, we are technically trading it's like we trying to win against them, honestly, because they got the most money. So when they have all of this money in the markets, they have the ability to make the value go up or down very quickly, because they can sell or snatch out their money by the millions. And when you do that, you kind of make the market move because of that. So like when you take out a million, so say I'm in a position and a corporation takes out, I don't know, $1 million, that's going to make well, when we have to do with the charts. Now it'll make sense when I'm showing the charts. But with the charts, that's going to make, so say prices here, right? And a bank comes in and snatches out $1 million. That's going to make it go down. If this was a candlestick, I don't know. I hope this makes sense. If this was a candlestick, they snatch out $1 million, boom. That's going to make it go down because now $1 million has been taken from it. But say me as a retail trader, I'm up here. I'm like, yeah, I got my $1,000 in there. My $1,000 being taken out from me is not about to do anything, especially when there's millions of dollars that's already in this pool. My $1,000 is it's not affecting the market. But when $1 million comes in, it affects the market and makes price go down. So banks, corporations, and governments, they are huge participants in the Forex market. So now, the last but not least, you got the retail traders, and you got the institutional traders. That's me and you. Institutional traders are still different, but we're all individual traders retail traders are individual traders who trade with their own money. Institutional traders are most likely probably trading on behalf of their clients. But we're not governments, we're not corporations, and we're not banks. So institutional traders usually work with more capital than we do as well. But you could be an individual retail trader and you might have hundreds of thousands of dollars because you're rich. Shout out to you. That's what I'm getting at. But anyways, that's the last slide. I'm actually going to leave it here because I just kind of wanted to give y'all the basics of what the Forex market was so that you can kind of have an understanding of what you're getting into. And so in this series, I'm going to actually break it down of how to trade, what to trade with, how to use the softwares, how to look at a stock chart. Because with stock charts, not stock chart, but with a chart period, so a currency, a Forex chart, it's so much that goes into it. Like you have to really know what you're looking at. So I'm going to break these down. I didn't want to put that all in here because the video would get super long. This is already like 20 minutes. So so we're going to leave it here. I basically told you what foreign exchange is. I told you who trades in the market, what it means, what's the disadvantages and the advantages, and what currency pairs are, stuff like that. So in a couple days, I'm going to be dropping the second video, which will be going over a stock chart and the basics of it. And then after that, I'll actually let y'all see me get into a live trade so you can see how the market works and stuff like that. So anyways, I'm Morgan, the CEO. I hope that you all got something from this. If you did, make sure you subscribe, like the video, share with your friends, comment if you have a question. If something did not make sense to you, I can give you a more in-depth explanation. If it's something I didn't go over, let me know. Be happy to answer your questions and just talk to y'all. So peace out, y'all. I'm Morgan, the CEO again. Don't forget to follow me on other platforms. It's Morgan, the CEO. Just here it's Morgan's Builds Wealth because that's what I'm doing. If you follow me on here at Morgan, the CEO, that's actually my music page. So you can go over there and subscribe as well. And check out my website, morgantheceo.com. All right, peace.
Yeah, I want it all. The money, nice clothes.